Hello, hi, it's Adil bringing you a review of the FTSE 100 for Thursday's trading, the 17th of July 2014. Okay, so interesting day. Right, okay, so far, plus 50 points in the live analysis service for subscribers. Today I misread the market to a large extent, so a pretty poor day today, although still up for the week, but still a poor day for my standards anyway, because the market is short squeezed higher, even with Asian markets down overnight. We did have Chinese GDP being slightly better than expected, but the Chinese market obviously interpreted that as being bearish because it was down overnight, and obviously given the fact that there's less chance of stimulus, and obviously with regards to growth going forward is going to be relatively weak. Okay, so basically we had data out with regards to the UK today. We had the unemployment, or basically UK claims, okay, or employment claims are falling. Okay, so that obviously is interpreted as being bullish, but there was a caveat, okay, and the caveat was the fact that we had the average hourly earnings dropping, okay, or average hourly wages, earnings, call it what you want. Basically, the level of disposable income is certainly dropping. If that's dropping, then that's obviously interpreted as being bearish, which isn't a good sign given the fact that inflation data the day before, on a Tuesday, came out higher than expected at 1.9%. So if you have your disposable income being reduced and your basically inflation rising, that means that your real earnings, okay, are falling, which is obviously bearish. So it doesn't bode well with regards to the UK consumer. Okay, so that's basically how we interpret it. Okay, so overall, what does that mean? It's negative. Okay, now we also have geopolitics that are being negative or weighing on the negative side. So you've got situation in Ukraine, Russia. You've got the situation in the Middle East. Okay, you've got the situation in Iraq, and obviously Israel, Palestine. So that obviously doesn't bode well. Okay, now with regards to the US, then obviously you've got tapering concerns there. Miss Yellen talking about bubbles and excessive risk taking. Any type of comments like that obviously doesn't bode well. Okay, so with regards to the markets going forward, so overall the bias still remains to the bearish side. Okay, so average earnings at 0.31. Anyone still think the BOE will put rates up this year? So obviously with average UK claims obviously falling, but the average earnings did not rise. Average earnings weekly is 0.3%, survey was 0.5 and 0.7%. So that's basically what you need to focus on with regards to the FTSE. But yet the market still continued to short squeeze higher, which really baffled me. Mainly a lot of the short squeeze higher was mainly based on the fact that Portugal obviously had a dead cat bounce, as you can see there. Today we had quite a considerable bounce. Not much of a bounce, but slightly considerable. Okay, so that's one of the reasons why. Maybe they got excited over the China's GDP, but yet Shanghai still remains negative. It's almost 3 o'clock in the morning and it's still negative as we speak. It's minus 7 points down. So the Shanghai certainly isn't bullish, or the markets are not interpreting it as being bullish anyway. So that's an interesting thought there, folks. So just keep an eye out for that. Okay, so that's something that we're going to focus on. Okay, so given the fact that China obviously is weak, given the fact that we've got the US markets obviously certainly continuing its short squeeze higher. So where does that leave us with regards to the FTSE 100? Okay, let's have a look then. So let's go to our charts of the 10-minute chart of the FTSE 100, and let's just observe that. Bear with me. Okay, so First of all, 60-minute chart. Let's have a look at the large time frame. Large time frame. Obviously, we're in the upper channel resistance, and previous support equals resistance. Okay, so that's basically where we're at with regards to that. 10-minute chart of it, as you can see, we had an inverted head and shoulders formation based on the euphoria, most probably over China, most probably over Portugal, dead cat bounce, and most possibly over the UK employment picture. And obviously the market continued short squeeze higher, hit the inverted head and shoulders target at 6790. Obviously now we're looking for a potential reverse lower. Why? Because you've got an unfilled gap there at the 6710 level, then you have an unfilled gap there at the 6690 level. So there are two areas that the markets need to focus on the downside. We do have the potential here now for a possible HNS formation, so we'll see. Your left shoulder there, head, right shoulder being put in, so we'll have to observe and see exactly how that plays out. Okay, so watch out for the unfilled gap here at 6710 and 6690. Okay, there's two key areas for us to focus on for now. Okie dokie. Now let's have a look at the daily chart of the FTSE 100, see if we can gauge any type of direction from there. So the daily chart at the moment, obviously we've put a bullish engulfing candle in, and we are back into the retracement of 61%. So again, that is going to hold as resistance. We've put in our double top. Now we're looking for a potential lower high. This is your lower high as we speak. Previous support equals resistance. So this level here around the 6790, 6780 will be solid resistance. We've put in a lower high, looking for a lower low, and obviously for the market to reverse. We can look at the pairs. So we can look at the FTSE 250, for example. We are holding this level here. Obviously, given the fact that we're on the larger time frame, it's a HNS formation, as you can see. So this level still certainly remains vulnerable. So keep an eye out for that level there. FTSE 350, again, we do have the retracement. Retracement is coming up to the 61%. And we've put in lower lows, lower highs, and looking for a lower high and for a potential move lower. Okay. Now we can confirm the strength and weakness on the FTSE 100 by utilizing the Dow. The Dow is usually a good index as to interpret, or a good way of interpreting the market. And as you can see, the Dow is into the upper channel resistance. So if this resistance holds and the Dow Jones reverses backwards, then obviously that takes the FTSE 100 with it too. So that's interesting to observe and keep an eye out for. Okay, so ideally we need a catalyst now. Most likely Asia will provide it. If the Asian markets are down overnight, then the US markets will obviously follow, and that means that the FTSE 100 will certainly look to reverse, which really is showing signs on the smaller time frames. Provided the 6790, 6780 level holds, then we certainly are looking for a move lower. Okay folks, so risk on, risk off, wax on, wax off. Goodbye.